Welcome, ladies and gentlemen. This is your host, Robert Roy. Hope you're having a great trading day so far. Today, let's go ahead and make sure you all can hear me. If you would go ahead and type the number 1 in your questions box, I would greatly appreciate it. Nothing worse than talking to myself for the next half hour, hour or so, and realizing that no one else can hear. How you doing, Steele? Welcome, welcome, welcome. Good to see you. Teresa, thank you so much. Teresa said, happy birthday to you and your wife. My wife was just a couple days ago. Mine is mañana, tomorrow. As we're headed out of town on vacation, I get to drive 4.5 hours on my birthday, headed north. But thank you for that, Teresa. I do appreciate it. Yeah, it's funny. Thank you, Steele. It's funny, Teresa. My wife and I are 4 days apart, and both in August, of course, and my children are both in June, just few days apart as well. So we've got 2 months out of the year for the 4 of us to have our birthdays done. All right. Well, excellent. I appreciate it. Welcome. Let's go ahead and take care of our disclaimer. Let's get this thing right out of the way so we can get into the really good stuff. It basically says that I am not an advisor and cannot legally tell you to buy or sell a stock. It is against the law. The SEC requires you to be licensed. I am not, and I do not want to be. So if you find a candidate, indicator, trade setup, something, anything you like here today, my suggestion is you paper trade it first before ever putting 1 penny of real money into the trade setup or indicator, and then and only then would you do so if it fits your own personal risk profile and tolerance. Now keep something in mind. Because I am not an advisor, that means I'm not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. All right. So guys, I added some things to this. You'll start seeing this come out in Covered Call Explorer as well as E-mini Think Tank starting tonight. But a little bit of what's going on, what's next. People are asking all the time, Rob, how do I see you? How do I learn more about this? Everything is going to be right here, guys. Wherever I'm going to be, whatever I'm teaching, we'll have it listed on this page here. So you could either go back and A, watch the recording of this, B, do a screenshot. So Power Hour is every Monday, right? Online workshops, Monster Market Movers, has moved to the 30th from the 31st. It's still this month. E-minis are every Monday night, so this evening, 8 to 10 Eastern. And then on demand, guys, you could still pick up the last Monster Market Movers and Cheapskate Trading as well, which was a great 2-hour workshop. All right. Let's see. Why is that hidden? Hold on a second, guys. Let me hide that. I don't know why that is. All right. So this page, for some reason, I had it hidden on a master slide set. So guys, this is how to get in touch with me. This is where you will find me. This is where you will see the various things I do. So as an example, on Facebook, I will not be posting it anywhere else except on Twitter to go to Facebook. But I will be doing every Tuesday a trade, 1 trade for the week that I think is one of the best ones that are out there for that week. We haven't named it yet, but if you guys come up with something and you want to shoot a message to support at wealthbuildershq.com, that would be great. But we're going to have every Tuesday, I will have it posted there in the morning, so I'll do the research on Monday after the market closes, and we'll have various trades posted up there. And again, you won't get them anywhere else. You're going to have to be part of the page. You're going to have to like the page to be able to have access to it. But here's access to everything, guys. If you want to follow me on Facebook, right? Personally, it's Moneyman94 and so forth. All right, so let me go ahead and jump out of this. And let me go and bring you guys first into the S&P 500. Now, what I'm looking at here is a very long-term picture. I think, okay, let's see. Don't know why I did that, but let me ensure that won't happen again. You just shut that down. So long-term picture on the S&P 500, and you can see I've got this drawn back where I started my drawing in January. The line goes back further than that. Right? You'll see it picks up. Its overall uptrend just was not as important of a line where it was. You can see back here we've got more hits down on this lower level here, back on this wick and this one here. But we're focused more on this line recently, the upper one. This higher one right here has been a great source of support. And then over the last couple of days, on Friday, we had this, or Thursday, this big breakdown through. Friday was a retest of it and a slight fail. And then we are looking at today. I updated, let's see, 11:33 was the update on this. So we're close. You can see it's just flat, not really much. It's up 1 on the S&P 500, not a whole lot. Guys, there are some light lines that are in here. This blue one is the 144, as you can see right here, and it is simple. And then this gray one is the 233, also simple, no X after them. So you could see that this red dot line here is 2400. We always look at 100-point increments on the S&P 500. That's 2400 is the red support there of 2400. It's also 2498 cents is the top of the previous fib that we ran right in here. And then we've got the 144 right now at 23.90.16. So guys, we have a phenomenal confluence at that 2400. So that's really the line in the sand. We may get that pullback down to that 2400, and I'm okay with that. You know, if you keep something in mind, what we look for a normal correction of 10% would be 250 points-ish on the S&P. If you look at the exact high, right, you're looking at, I'm sorry, not 250 points. You're looking at the overall move. So you're looking at about 2,491 there. So guys, if we can get this pullback down to that 2,400 level and the bounce, I would be very comfortable in that. If we break that level, guys, there's 2 more tests down below this secondary uptrend line and then the 233. But no matter what, we are in a very interesting time right now, which means shorten up the length of the amount of time you're actually in the trade. I will not be holding very many trades for a long time at this point. I will be dramatically decreasing my risk, and I'll do that by decreasing my amount of time I'm willing to hold on to a position in there. So I'm looking for more explosive positions to happen over a couple of days than I am to happen over a very long period of time. All right. So you guys should have, hopefully, some charts that you want to look at. So let's go ahead and do that, guys. Let's focus on some of the charts that you guys have coming up first, or have first. Give me some of the symbols that you want me to take a look at for. And I know we get the typical and the standards in there. Let's see, no Robert here today. Okay. All right, so Teresa put in Caterpillar. I love Caterpillar, Teresa. The funny thing on Cat is I had a bullish position that I did on this. I was actually in a diagonal spread, and I was called away from Caterpillar in 2 separate instances. They didn't take the whole position away at once. I was called away from it twice midweek. I was in the money slightly, but they actually called it away from me midweek, you know, like Tuesday, Wednesday, and it was expiring on Friday. And I wasn't in the money by much. Somebody must have had a position on the other side that they were in trouble with, and they chose to exercise instead of spending the cash. I wound up just buying the stock itself instead of winding out of the position with my option on my diagonal. But Qs have been in a sideways move ever since their earnings. They had a great gap up on earnings, and they've been sideways in there ever since. And if we just kind of zoom in there, the first thing I would do on CAT at this point is this box of neutrality, right? Just kind of trying to highlight where we've got the levels of flatness in there. If we look at the previous fib that we've got drawn on Caterpillar, and I'm going to, we've already violated the 618, the negative 618. So we need to redraw that fib. You can see right here is negative 618. We need to redraw the Fibonacci, or should I say, look for a new place to consider redrawing a Fibonacci. So I will back this up a little bit. We will snap a new line from this low up to this high. Just day of announcement, earnings announcement is fine. I want to see at least a $1 difference between the 618 and the 50 line, 108.85 and 110. Give me a second on that, Steele. I just saw your answer, your question there. Excuse me. So now we can zoom back in a little bit, get a little closer view of this. Let me scrunch it down. We'll hit the scrunch key, which is F11 on the TradeNav software. So guys, let's see. Let me go back to template number 1. Oh, actually, I could have just done it this way. Yeah, let's do that. So I like working off template 2. I'd rather not go back to 2 different templates. So what I'm looking at is we've got a Fibonacci here of $2.90. So 115 to 117 half. Okay, so yeah, we're good. We do not need a Fibonacci in here. So guys, first thing I want to see is bullish news. So realistically, I want to take this one to the upside. If we do get the breakout, I needed to break that 115 level. Close above. You notice the 2 wicks above, but we never closed above right here. Close above, come back and test it, bounce, and then 117.5 and 118.5 are the 2 upside targets in there. Okay, so those 2 targets. Now notice I didn't give you exact numbers. I'm not going to read 117.55, 118.63. In that range, guys, is where we're looking for. On the downside, if we can get the move down into 108.85 and bounce, we're looking at the upside down H pattern. And I know some of you guys are not familiar with what I'm talking about. Many of my students are. Those of you that have been with me a long time know exactly what I'm talking about. Guys, I'm going to be doing a free workshop soon on Fibs. We're actually going to talk a little bit about it today in the educational component. But I'll be doing a free online workshop about Fibonacci's soon, where you guys can learn a little bit more about how they work. All right, so there's my analysis there on that, Teresa, on Caterpillar. All right, so look for the move above that 115 before doing anything. But I love what it's done. But guys, if you look at right now on Caterpillar, as using that as the example, if you look at the options on it, where are we? Today is 21, right? So let's look at the 25th. If we go to 115, the 115 calls are going for about 37 cents, right? That's the mid, 36, 38. So 36 cents on the calls there on that 115s. So it might not be a bad idea to look at maybe a January option here of trying to buy maybe the 108s or so. Let's see. Don't have it. So 105s, that'll work. At about 1170, the midpoint is what I'd want to trade these at. So I don't know why TradeStation has changed their software a little bit and it doesn't stay even if I save it. So definitely an opportunity for something like a diagonal. Teresa, you're welcome. Welcome. So Steele was asking, what did I mean by called away? So Steele, what happens is in a trade, when I have an options trade such as a covered call, if I own the stock and I buy the covered call, and let's say that, let's just whiteboard it. So let's go ahead and grab the drawing tool there. And let's say it's Caterpillar, right? Just to use the example. Actually, let's not. It's an expensive stock. Let's go ahead and use Ford, right? Which is F. And Caterpillar is just expensive to buy the outright stock. But if I buy the stock, and if we just get a quick look at Ford, for $10.58, right? So very low priced when you're looking at stocks. I said 48. Close enough. But I would sell to open the $11 call, and let's say for that $11 call, STO, sell to open. Let's say for the $11 call, I can get 20 cents. and I don't know what it is, nor do I care about the exact numbers, but I can sell it for 20 cents. So still what happens is if Ford stock stays below our price of $11, the strike price that we sold, right? If here's 11, if it stays below there, come expiration, no one's going to take the stock away from me and the call would expire worthless. If it gets above the $11, right, anytime between now and expiration, and let's just say expiration is here, right, my big X, expiration is here, they're going to take my stock away, right, and this was 11, they're going to take my stock away at $11, so it's called away from me because I have an obligation with my option that I sold. All right, does that make sense, Steele? Okay. So the Steele said then, okay, the margin team stops you early. Well, somebody, a customer of theirs, someone that had bought an option, decided to exercise and then take the stock away from me. Instead of just selling the option at a higher price, they decided they wanted the stock. Now, why would they do that? Usually, it's because they don't have the cash to buy the stock, so they exercise the option, even though it means losing money in many cases, because they're losing the time value of the option. At that point, it gets them out of the position in the cheapest fashion, least cost to them in the trade. Oh, Joan, I don't remember the day I was called out. It was pre-earnings. It was pre-earnings when it happened. So Steele said Toss does that after 12 on Fridays. Yeah, and Steele, you may be able to talk to them if you don't want them to and say, listen, I know I've got an open position. I plan on closing at the end of the day, but I don't know why they would force you out of a position. If it has intrinsic value, I understand. But if the stock is still trading at 1048, hopefully they're not forcing you out there. Not for the dividend, Joan. It wasn't for the dividend. I was not. What did they pay on dividend? Let's see, 15 cents. I mean, to exercise. Oh no, that's not them. Wait a second. That seems small, but let's see. So 78-cent dividend. You're exercising a $100 stock, $110 stock ish to get a 78-cent dividend. Maybe, but they didn't take my stock away. Well, okay, they exercised their option. The option that I did it as a diagonal. So I just in turn used my option as the proxy. I had enough of the move because I was involved in a decent run on CAT overall. Steele said they'll let you wait till 3:45 if you ask. Steele, is that if you have an in the money option or even if it's an out of the money option? You're welcome, Joan. Steele said they'll let you wait till 3:45 if it's an in the money option. And even that, what if I want to be exercised? Maybe you have to tell them that, no, let me be exercised. Maybe that's what they're waiting for. And it's good and bad. The good of it is, in case you forget, you're not around, you don't wake up Monday morning owning 1,000 shares of Priceline that you don't have the cash to pay for. I get that completely, right? $2 million that you got to bring into your account. Even at 50%, you're bringing in near $1 million to your account. And they really don't want to hear, hey, I've got $14. Can I give you the rest someday? Right? They're looking for all the cash because they have to come up with all the cash. So I get it if they're forcing if you don't have it, but as long as they allow you to be exercised if you want to. Okay, good. So Steele said you can tell them that you have the funds, and they will to cover it, and they'll let you do it. Okay, that's great. TradeStation will start sending you notices. I have not had anything taken away from me forcibly that I didn't want to or closed out. I mean, we used to use another broker through eSignal and then another one with called Real Time Markets. And when we were exercised on those, we would be exercised on those positions all the time, starting at 12 o'clock. And it just it drove me nuts to be exercised early when I may be sitting there and and you want to be don't want to be exercised. You want that position, and they're forcing it down your throat. So never fun. Okay, good, Steele. All right, so the key is, Steele's bringing up some great points there. The key is to check with your broker and find out from your broker what's going on and what they do, where they're at, and what their rules are, because for each broker it is a little bit different. Nick, how you doing, sir? Let's go look at NVIDIA. If you guys have other symbols, drop them in. So, guys, I already have a Fibonacci drawn on NVIDIA on this move right in here, which is a nice little move. We had a good pullback to the 618, 1-2 standard deviation move before the fail. We came back up here to the 236, tested the 618 again. Good push up, a lot of resistance there that time. We channeled between the 236 and the 0 with a little bit of a zero line breakout and a fail, and we're sitting right back at that 236 now. So let me go ahead and zoom this in a little bit for us. Here we go. So we had earnings come out right here. Actually, give me a crosshair. I like that best. So you can see what the earnings were. They gapped down on the earnings and then made a, well, dividends are tomorrow. Tomorrow? It's not Wednesday, right? Yeah, tomorrow, 22nd. So now the key is this. So we're sitting right at this 236 area. I think some are going to wait to see what they actually do with dividend. Some will hold on to the stock just trying to capture that dividend and then try to sell after. But we've had this fail all the way back 5 days in a row, 1, 2, 3, 4, 5. Some would look at this and call it a falling 3 pattern, even though it's 5 candles. And if we really zoom in on it, trying to make it as big as possible on the screen. All right, so you had these 1, 2, 3. That would be great as a falling 3. Then we had this next candle. We are actually lower on the body. Now, this is today. Remember that. That's the only thing about it. This is today, right? So I don't look at these as, I like to see the exact number of candles, a falling 3 pattern or a rising 3 or 3. You can get the outliers sometimes, but when you measure the validity beyond the 3 days, it's not as accurate as a pattern if it goes further than the 3. And if it's 4 days, the accuracy is very low. If it's 5, it's better. But why 3s and 5s are fibs, 4s are not. 4 days, 6 days, 7 days, they're not Fibonacci numbers, and they do not carry the weight, the strength that it does if you get it to a fib number. And we'll talk about the Fibonacci timeline in just a little bit. So where I'm looking at with this, Nick, is this 55 EMA is my first down point, the 155.60 level. If we get there and bounce, I'm good. Why? Because that's where earnings went to. We bounce. I don't care if we pierce through it on a wick, as long as we don't close below it. If we can get the bounce, awesome. I might day trade it up to the 159 level or back up even to the 163, 289, which is the 8-period EMA. But I'm not going to carry something that's a long-term position on it until the moving averages shift and we get above the pink line, right? So if we do make the move down, 152.5, 148 are the two downsides. On the upside, 168.5, 174 are the two upside targets on NVIDIA. I do like them a lot. I just need to see what they're going to do between dividend day now, tomorrow, and if they're going to bounce from there. Hey, Walt, let's see, LMT. All right, so let me see what we've got here. So LMT, which is Lockheed, let me drag this back a little bit, get that fib out of my way, and I'm going to draw another Fibonacci on here. And we're going to come down from, let's do this. Let's do it this way. Let me take you over to a page where we have no moving averages. Let's get rid of the crosshair. Okay, so what I am looking for when we draw Fibonacci's is I am looking for the largest directional move closest to the right side of the chart. And that would be the way you want to write it down. The largest directional move closest to the right side of the chart. And I am not looking for stair steps. I'm not looking for chop, right? Some would say, well, wait, Rob, you got a fib drawn from that low up to that high, but why didn't you draw it to that high? Because it was higher, right? Well, then the question is, why not that high? And then, hey, why not that high? And then if we do it that way, why not just go back to a yearly chart? We'll do a monthly chart and go from the very lowest low it's ever been to the very highest high it's ever been, right? There's no continuity in that type of a movement. I am looking for a daily chart, which is what I trade off of. I am looking on average to be about 4, 5, 6 of time back, and I'm looking for the largest directional move. Now you can go back and find the previous fib, which I already have one drawn on here. But what the best way to view it, if you have an opportunity to draw on the chart where you can actually see it, that to me makes the best move. I don't care about that little hiccup in there, that's fine, right? For the most part, this was a straight up move, and then we went sideways. And we had this nice move up, and we failed. So what did I wind up with? I wound up with a V bottom right here, my starting point, and I wound up with a V top, which is my finish point. And then from there is where we draw the fib. Now what happened? From there we went sideways, little move up, sideways, right? So there's another move up right there. But if you measure the move that's inside of the start to finish, this 248 to 247.57 level, that is 48, 58, 68, I don't know, 26 points-ish, right? Well, this move here is not bigger than 26 points, so no reason to redraw. Now, once you violate that negative 618 on a closing basis, and we did, right over here somewhere, maybe a couple days before or after, but right about there, right? We violated that and we closed above, right? Once that happens, Fibonacci's need to be redrawn. Now, it doesn't mean you redraw them the same day. Oh, it broke, I got to change them now. Well, not necessarily. You got to change them. Doesn't mean it has to be now. But you have to find the right place to change them at. So if we go ahead and look here, I've got a V bottom, right? I have a V bottom here. Let's do that. And here's my V top. And so we can see where the move was in between there. Right? Now I move up, sideways, like sideways. It's a very good thing. Move up, sideways, up. And there's my V top. Okay, beautiful. From that bottom to that top is where we would draw the Fibonacci's. When we draw these fibs, when we drop them in there, it gives us, watch, it gives us a defined series of support and resistance levels. Here's the thing. I don't need to know nothing about the math behind it. You don't need to know what standard deviations are. You don't need to know why those decimal points are there. You just need to know how to set it up on your charting software. Whatever charting program you use, if you're using any kind of advanced system, what do I mean by that? Trade Navigator, which I have right here, right? If you're using TradeStation, if you're using TOS, if you're using eSignal, they all have Fibonacci's as part of their tools. Some have more extensive Fibonacci tools than others. So I will tell you the most extensive Fibonacci tools I have seen on a charting software package without paying for extra charting tools is on Trade Navigator. Right? They have multiple fib tools. I don't even have them all listed here, guys. Right? Fib circles, Gartley is an advanced one, AB equals CD, fib extensions, fib support and resistance, right? Expansions, there's a risk reward. Then we get into the time ratios on Fibonacci's, right? Time extensions. All of these are time zones, right? All of these are fib tools that you can use. We primarily use this main tool called Fibonacci support and resistance. That is where, as a brand new fib user, trader, that is where 95% of your fib tools will come from. As you start branching out, I use that fib support and resistance is probably 60% of my fib tools. I have other tools that become extremely important, which I will show you one in a moment on TradeStation on a trade from today. I will show you the one more advanced tool that I use very extensively as well. So we're going to draw Fibonacci's from that low up to that high, right there. So that's our starting point right there. And then our finish point is going to become the highest high right there. And I don't want to draw right to the wicks because it's going to get in my way. So I come here and I'm going to snap a line or a Fibonacci. And watch, if I get close to it, it's going to snap to it automatically. Watch, it's going to pull the chart in. You see it jumped? Watch, I'll do it again. Watch it jump. It pulls right down to the wick. We draw from the lowest low to the highest high in that pattern. And then from there, we would move out and we would extend our Fibonacci's out in there automatically. And I'm going to take these arrows off because I don't really have a need for them any longer. Okay, so Steele asked, how big of a retracement before you disqualify the move? So Steele, the first, to make sure we answer the first question, is the violation of the -618 is when the fibs need to be redrawn, right? That's number one. The second one is the violation of this midpoint right here, which is the 882, that center line. That is where the other one of the fibs being redrawn. Okay, those 2 points. All right, so LMT, this was Walt, right? Yeah, Walt. Okay, so long answer, Walt, for doing this, but I wanted to use it as a teaching opportunity along with just analyzing. I could have snapped the fibs on there and said, there you go. This is what I would do. Doesn't really help much if you're not familiar with them, though. So if we go back over to my primary chart, which has moving averages on it, and here's what I'm going to do. I'm going to hide these moving averages because they're messing up the height of the chart. So right now we had a great move up and a fail. Right? One of the keys for you is if you made the move back to at least that 236, which is the hesitation level, if you made the move at least back to that point, then you know your fibs are probably in the right place. When you're picking a move in the first place, Steele, once you draw the fibs, you want the distance between the 618 and the 50, which these are retracement levels, which I'll explain to you in a moment. You want that distance to be at least $1. So 187.60, I would have to have a move up to 188.60, which we definitely exceed that, and that's the minimum I want to see on my positions. So if we took Ford, and we'll come back to LMT, if we took Ford and let's see, so here's my move from this high down to this low, right? If I draw the Fibonacci in there, extend this out, you can see 1223 to 1208. Yeah, it's not really a lot of move in there for me to take advantage of that type of a, that small of a distance. So low price stocks, Fibonacci is not the best indicator, but really it is. It's the best indicator as to why you probably don't want to trade this one in the first place. Right? I'm not saying you can't make money on Ford. What I'm saying to you is the standard deviation of a move is so small in the grand scheme of things, it is probably not worth the effort to go ahead and try to use that one as a trading vehicle. Right? When there are other stocks that I could trade, I'm just trying to see if anywhere I have a move where I could show an example of a 2 standard deviation move. It's more than that. Let's see. No, they didn't. Going back to 2015, I don't see anything in there. Okay, so Steele, does that make sense? That dollar? Does that make a full understanding there? All right, and Walt, we'll get back to LMT. Yeah. Okay, you're welcome, Steele. Good. So now let's look at this. I will normally start off with an F4 and F5. This is F5. This is F4. And I'm going to get rid of that arrow. just so I don't like leaving random things on my charts, especially since I use this computer to trade off of. So we'll go to an F4, 3, 2. I don't really need even that. This is as close of a zoom as I can go on a standard on Trade Navigator. So what I'm looking for is this. We made the pullback down to this 21 EMA. I want to see us get back above 300. If we get back above 300, then Walt, what I'd like to see is a close above 300, maybe 301, 302. Come back and tag that $300.50 line and bounce. And then from there, I'm looking at 308.5 as my first upside target and 318 as my second upside target. If we failed off of that 308 and did not get above it, I'm looking at 300 and 295. And keep in mind that 300 is about a confluence right now with the ADMA, which makes it even stronger. Helmets, can fibs be used intraday? Absolutely. I cannot wait to show you the fib trade from intraday today. 2 Fibonacci tools tied together, pre-market entry based on the overnight moves and the historical highs and lows where they've been at. And I'll show you, and this is on a future trade. But short answer, Helmet, absolutely can and should be used on every chart you look at. Even if it doesn't have enough of a move between the 50 and 618, intraday it will tell you where it goes to. You just count 2 lines of from where the move bounces, and you'll be able to ascertain the expected move. All right. So when we look at this one, we've got targets for it. Not Helmet. Helmet asked the other question. Walt, so hopefully that's helpful. You're quite welcome. Walt, excellent. All right, and then let's see, I saw Qs come in. Robert was asking about the Qs. Guys, I love trading the Qs. Qs, spiders, Russell 2000, the rut. To give you guys an example, background history on myself and the Qs, back in 1997, I took my very first workshop as a student of trading, April of 97. 1999, I was teaching for a company, and at the end of 99, 2000, I was teaching for the company I learned from, who's no longer in business. And at that point, I created a class called Trading the Qs. And it's funny because what was it? My wife saw it. Yes, we were in the car. EX. It was a license plate. I think this was it. EX space, excuse me, was the license plate we saw. It was a New York license plate, one of the yellow and blue ones, gold and blue. And we saw this, and I said, honey, you don't remember it, but I had a newsletter called Excuse Me, was the name of the newsletter. And it was Trading the Qs. And guys, this was before I had started teaching in 1999. I had this newsletter out there, and I had over 5,000 people on this newsletter, on this trading newsletter, and it was free. Sent it out every week. It was a free newsletter. I finally stopped doing it because somebody was ripping me off and selling the stuff I was giving away for free. And after going after him twice with my attorney, and he just kept doing it under a different name, it wasn't worth it. So he had subscriptions he sold. He actually had the audacity to complain to me that he could no longer offer the information to his students, and people had paid for this, and how dare I stop using it? I want to crawl through the computer and kill him. Yeah, exactly, Steele. Good plate for a New York City driver, excuse me, right? But guys, I taught one of the very first workshops ever on trading the Qs, ever. Produced books on it. I sold them on eBay. Thousands of copies of these books we sold. Pivot points along with it, how to trade with pivot points. I did the live workshop for the company I was working for, and it was a huge success. And all of a sudden, you get all these other people out there that are teaching about the Qs and the spiders and so forth, right? But definitely, when you look at Steve Nissen as the granddaddy of candlesticks, I don't know if I'm the granddaddy, but goodness gracious, I'm a close relative of the granddaddy, if not, of being the one to teach this. I love the Qs. I think the spiders are a better position to trade now, but I am a tremendous fan of this position, and I think everybody should consider it in their repertoire. So I'm going to move off of this template. I'm going to move off of this template to template number 1, which has no moving averages on top of it, right? Only for the ease of seeing it is my only reason for it. Okay. And I want to be able to draw on here. And without the moving averages, it just makes it a little bit easier to work with. So you can see the starting point was down here, the finish point was up here. Very straight, strong, bullish thrusting pattern all the way up. Wonderful fail. We fell back to the hesitation point, which is that 236. I'll just put HES for hesitation. This is the Qs, right? See the upper left. The most important line on Fibonacci's is 0.618, right? There's a pattern that I teach. It's called an H pattern. And if you look at an H, typical H would look like what, right? If you just drew an H, it would look like this, right? That's your typical, lowercase h. In Fibonacci's, it looks more like this. Right? Very dragged out, okay? Well, what I'm looking at right here is the move up. It's hard doing this with the mouse, trying to duplicate that. And we made this move down to this 50 line and curve back up, right? There's an upside down H. The absolute most powerful pattern in the market, period, the end, barring none, is that H pattern. I have not yet seen a pattern that is stronger, more accurate, more reliable than that H pattern is, period. If you guys are not familiar with it or not trading it, you definitely want to look for when I teach the free workshop on that to get you guys, to teach you guys how more about it. But this is the strongest pattern, period. Basically, you see it, you take it, you don't question it. Avery said, this is the first time I've heard of the H pattern. Yeah, now, Avery, there may be some other traders that call it something else. I just call it the letter as it is. People will tell me that it's an ugly H, and I say maybe ugly, but to you, but to me, it's the prettiest letter in the alphabet, and certainly the most profitable. Better than a W, better than an M, right? Definitely a more profitable pattern. I am all about 3 key criteria: high reliability, high predictability, and high repeatability. This is highly reliable. It is highly predictable, and it is highly repeatable. It happens over and over and over again. All right, which is the first 3 criteria before I even worry about is this a good one or not. Well, when you look at this pattern, what's happened there is we made that bounce. So we closed right near that 50 percentile. That next day, actually, let me do it this way. That very next day is where that trade should have been taken. The entry, I thought I clicked on the arrow, maybe not. The entry was taken on that day right there. Right? My first exit on that H pattern would have been same day, right there. And look where it closed, right at that fib line. My second exit was right here. Now, depending on how advanced of a technique you're using, if you're just using a 50-50 exit, meaning I did 2 contracts, let's say. I sold one here and one here, you're out of the trade. If you do more of the advanced techniques that I teach, you would have been stopped out of the third leg of your trade. You would have been stopped out on that day. Right about there, you would have been stopped out. Right? So you would have been looking to go higher. And one of my advanced techniques that I teach, guys, and I teach it in an advanced fib class, is to have a 4-tiered exit system. I call it the 4-3-2-1 exit system. And that 4-tiered exit system is based on 3 Fibonacci exits and 1 additional exit in there. Here's the thing. Each line, well, let me not say it that way. Let me see how, let's reach back. You guys tell me. If you look at, and I'm going to reach you back to maybe high school for some of you, right? Maybe college, but high school for sure. Statistics. If you look at standard deviation, does anybody remember approximately? I'm not going to hold you to it. I don't know if I remember the exact number, but I'm pretty close. I have the exact number written down. But how much if you look at the standard deviation, what percentage of a move would encompass 2 standard deviations? It's a pretty standard number. There's a percentage of move for 1 standard deviation and a percentage of move for 2 standard deviation. Okay. Nick's the only one in there, and that. So, guys, the average move, and I get it. Some of you are like, really? I didn't do this to get math lessons, Rob. But I want you to at least have the basis of it. The average that we're looking at as far as a move, if you move one line, it's about 62% is a one-line move of the whole move. The second line is about 96%. So there's a 96% chance. Let me rephrase that. It's not a chance. By the time you move 2 lines, if you move 2 lines, 96% of the move has taken place already in that 2 standard deviations. Right? So that move, that distance, that travel that's in there tells us by the time we get 2 lines, we should be out of most of that trade. We still want to keep a little bit maybe in case we get a home run out of it. But when we look at the Qs, guys, it has had an awesome move. And it, oh, I don't want to go that far. It had moved back to the 50, bounced. It came to the 50 yet one more time and failed. Right? So now the question is, will it bounce off that 139.68? That's the level we're looking at now, Robert, on that on the Qs, is will we get the bounce off that 139.68? If we can get that bounce off 139.68, I'm looking at 141 and 142 are my 2 upside targets. Not a lot of room in there, but it's the Qs. It doesn't have Qs, right? The Qs on average move about $1.55, $1.57 a day is what they move on average. So it's not a huge mover. The Qs are not a huge mover, right? So if we do get the fail, and if I'm going to take it back to my template number 2, okay, let's get rid of this. And this again. All right, so let me just hide those. Just because it makes zooming in a little bit easier. You get a better height on the view. Right? If we do get that fail, I would look for, well, I'm not going to teach it. Again, an advanced trade setup they teach in more of my advanced stuff. But guys, there's a trade setup, those of you that have been through my advanced classes before, called the Fibonacci 4-step. I look for the Fib 4-step as the next setup there if we do violate, if we do break, right? Okay. Let's see. Apple. And that was Tony. All right, so Apple's in a very precarious place right now, guys. We had a bearish Fibonacci originally drawn on Apple. It has definitely changed direction, which means changed the fib. And I'm going to leave the moving averages on there just for the purpose of time. All right, so still 152.06, 153.53. I have at least $1 in there, right? This resistance line is just a placeholder for where we were at this top, just for the extended out of what we're looking at. What I see right now on Apple is a channeling type pattern between 155 and 160, we'll call it. About a $5 difference in there. If we get the bounce, that will be awesome. Still said I made a few bucks on them about an hour ago. Okay? All right? Yeah, I'm a big fan of Apple. I like them as an intraday trade all the time. All right? And speaking of which, guys, let me take you over to my charts from earlier today. Right? So this is futures trading. Guys, I am at my desk religiously. If I'm home, it's rare that I'm not, but I am at my desk on a Monday morning, on every day of the week. I'm at my desk ready to trade at 7 a.m. computer's open, everything is done, 7 o'clock, ready to rock and roll. So you can see the 7 a.m. Line right here. It says 7 o'clock. You can see the 9:30 line that I snapped on there as well. Okay. Well, what happens is futures, this is the Dow. Futures open up on Sunday evening. You can see we gapped up from Friday's close. We ran higher. We pulled back. Right? We pulled back. And then we got into the European, not European yet, in flatness all through the middle of the night. We got to the European market right about here, about 3 a.m. And we had a little pull down, nice retracement up. And then you'll see from just an intraday standpoint, I have a Fibonacci drawn on the highest high down to the lowest low. All of this is noise, just sideways move, nothing really V bottoms and tops there, just sideways move before we failed, okay? But I did not have that Fibonacci drawn on there until recently, okay? For those of you that are Fib traders, this might be setting a Fibonacci 4-step up right now. Let's see, I may be trading that one pretty soon. Okay, so anyway, what happened? Well, I'm looking at the 7 o'clock time frame this morning. Right in here, 7 o'clock. And I'm looking for a potential entry. So what do I have going on there? I'm trying to do this and keep everything off the screen that we don't really need. Okay, so I need one more step down. All right, let me just do it from in here. All right, that's good enough. So I'm watching this. So I go, one of the phrases you'll hear me use all the time is look left. I go back and I look and I see this double bottom pattern in here, which was a catalyst off of the European market this morning, right? Then I come further back and I see all of this resistance that was going on here, right? And then I look one step back, and again, this Fibonacci is not drawn yet, right? So what I'm going to do is I'll just mark here as where the fibs are, just so you guys can keep a visual reference. I'm going to get those, okay? Well, at that point, I'm trying to find a place to draw a good fib, and I see this move down, but this is from Friday, and here we are Sunday into, which is here, and now Monday. It's a little bit far for me to want to draw a standard fib, so I go ahead and I grab a different Fibonacci tool, which is called a price extension line on TradeStation. And I really don't have the time to go into all the details of it. Again, it's an advanced tool, but it's ABC. Okay? So I'm looking at this saying, okay, if I do find a position here, is there some targets that I can use, focus on, if I can find an entry point, right? And there are, right? There's this 618 level, there's this double bottom pattern, there's this 100 level. All of these are ideal price points for me to consider an entry. And let's see. All right, so okay. I just don't want to, I want to make it bigger, but I don't want you guys to see too much. I want to advance through it kind of bar by bar. All right, so all I did was zoom in on it. All right, so now we're at 6:30 in the morning. Okay, here we go. So what I'm looking at is here's my 7 a.m., and I've got my fib lines drawn on here, and I've got my one support line down there, right? So if we start moving bar by bar, what happens? We move up, we keep playing around in those levels, right? We broke down and closed for the very first time down below that 21 EMA since, 4:30 in the morning or so was the last time. And that's where our last shift was in the market, right? Where we had to move above our moving averages, right? Then we pull back a little bit and we come back up. Now we get a moving average cross, right? And on that very next bar, the entry is taken and the trade is entered. So my first target for me is I'm going to keep my eye on this yellow line, but really I'm focused on this white line down below, this double bottom pattern that's in here. Okay? So as we just start stepping forward, you can see this is all it's all before the market even opened, right? Now we're at 9:30 in the morning right here, and I could see that next white line starting to show up. Right? Boom! On the open, we hit our first exit. We ran all the way down to this horizontal line right in here, and we're out of our first exit. Now I had 4 contracts, which is all I'll trade in pre-market from 7 to 9:30 is all I'll take, is a maximum of 4. Right? We made this nice move to the downside, and then we keep going. We keep going. We pull back up a little bit. We're good. We're good. I'm looking for my next move, by the way, down to this 100% line right in here, and we hit it. This is, let's see, at 10:05 this morning, we're out of this trade. And if I bring it current, just so you can see it, right, the entry was moving average cross, right? The first exit was here right after the market opened. The second exit was here. We went a little further down, but we made our 2 standard deviation move already, and we're done. We start to climb back up again. Guys, this trade, let me bring over this tracking sheet. This trade, I modified this calculator just for this. This trade netted us $1,010, 202-point move in total for us based on the number of contracts. 202-point move, $1,000 is what we picked up today on this between 7-ish, a little after, actually not 7, it was 8:15 and 10 o'clock. So an hour and 45 minutes, hour half, hour 45, somewhere around there is what the move was there. And then guys, other fibs that we're going to attach on here as well and look for additional moves throughout the course of the day. So Fibonacci's great tool to use, guys. One of the things is this, guys, I am a big fan of continuing education, right? Over and over and over and over and over again. Guys, when you go into Wealth Builders HQ and you go over to the tools section, and you'll get an email from me today with this, by the way, and you go to online workshops, right? Monster Market Movers is coming up. We just changed it. I'm going to change it there, but I just changed it to August 30th, right? Guys, you get 4 hours of prerequisite material into this 2-hour workshop. A big part of it is how we use Fibonacci's, right? It's the basics into fibs, right? There are multiple manuals. The videos themselves, guys, encompass 12 different videos in there. If I take you into what you will see once you subscribe to it immediately is the Monster Market Movers tab. Here are the 12 videos, what we do, right? They're all listed there. All right, and then it's this is the previous one now because I didn't load the new ones yet, although the prereqs are all there. Here's the workshop manual, or the workshop video, the 2-hour video of the workshop. There's the Fibonacci video, and then we've got the workshop manual as well as the addendum manual. Okay, so there's a lot of information, a lot of materials for it, guys. Because you were here, I'm going to send you out a coupon today, which will allow you to get a very nice discount. And Lisa will do the same for you guys. Actually, she's got something very special for her students. So if you guys reach out there, she's going to send you out a link as well. Her and I are scheduled to talk after class today. So hopefully I will see you guys there. And for those of you that are looking at the E-mini think tank, guys, also on our tools page, you have access to it. I just set it up, guys. I just made a quick change to it before we came in here today, which I will be taking down after we're done. And if you're from Lisa, she has the same deal, guys. I want you to do this through Lisa if you're with Lisa. But if we go over to the E-mini think tank and take you in there. All right. So it is 2-week trial, $5.95 for the quarter. Guys, if you had a trial before and you come in again trying to take the same trial, it will automatically bill you the actually $6.95, not even $5.95. That's the discount here. is the 595, and you'll be locked in at that 595, not at the 695 if you haven't had it before. All right? So take it, guys. Though here's the thing: tonight would be your first class. It all comes down to your decision isn't today. Your decision is 2 weeks from now. Is this something that will work for me or not? Right? So awesome. Guys, I hope you got a lot of great stuff out of it. Go ahead and head on over to Wealth Builders HQ. Get yourself registered. I will get this video uploaded before I leave for vacation. So if you guys would, go over to YouTube, and you'll find it right here on Wealth Builders HQ TV. I'll list it right here as well. Right? You'll see them here. I'm going to put both last week's and this week's next, right under the technical analysis. But if you guys would go ahead and like the video, subscribe to it on YouTube, help me build up the channel, I would greatly appreciate it. Teresa, you are quite welcome. All right, ladies and gentlemen, boys and girls, have you brought the cats and dogs? Y'all have a wonderful day. God bless. And I will see many of you tonight at the E-mini Think Tank. And for the rest, I'll see you next week come Power Hour. Take care, folks. Have a great day. Bye.